Assalamu alaikum friends, how are you? Hope you all are doing good. So here I have come with F5, which is also known as performance management. So I'm going to do a question on the CBE right platform for performance management. I will be doing the same for the audit and assurance, for a taxation, for financial reporting, for financial management I have done previously. So you can go and check, and I have also made the videos for the first four, F1 to F4. Okay, I have done questions. So the nature of performance management till financial management, F5 to F9, is a bit different, right? We have section C, which is added there. Unlike the first four papers where there are only two sections, section A and B, all are multiple choice questions and all. But here we have to write. So this video, I have divided it into three parts: part 1, part 2, part 3. Part 1, only section A questions I will be discussing. Part B, only part 2, only section B. And part 3, only section C questions I'll be discussing. Okay. So let's start. You can see on the right hand side, you can go to the performance management. Under SEC official resources past exam, we are going to do the practice test 1. Okay. So I'm only going to do one practice test. I'm not going to cover the others. So it is understood that by seeing the practice test 1, you know the nature of performance management. Okay, so this will also help people to know what is performance management all about, what are the things included and all. Okay, so let us start the exam. Okay, this will look a little bit different compared to what you have seen for F1 to F4. Okay, it starts with instructions like this. Okay, you'll be given 10 minutes to read all these instructions and all on your CBE platform. Since I've read this before, so I know. Okay, yes. So starting with section A. Okay, so question will come like this, where you have to select. Okay, a manufacturing company which produces a range of products has developed a budget for life cycle of a new product P. The information is the following in the following table relates exclusively to the product P. Okay, the company's total, so you have been given the total fixed production overhead budgeted to be 72 million each year, and the total machine hours 96 million hours. The company absorbs overheads on a machine hour basis. What is the budgeted life cycle cost per unit for product P? Okay. Performance management. The word performance management says that you are basically measuring the performance of the business. Okay, it's like a performance. So how do you measure the performance of the company? Okay, through budget. If you are performing better than the budget, that means your performance is good. Okay, so that's why budget is also there. Budget, if you see in management accounting also, which is F2, budgeting is there also. Heavily budgeting is there. Okay, in performance management also we have budget. So this is how your earlier studies helps you in your later papers. Okay, definitely working is required. So for this, what you can do is you can use your calculator. As you can see, you have the symbol, you can highlight your text, strike through. Okay, you can use a calculator, and scratch pad is there. Okay, you can write, do your workings and all if you want to do calculation. Okay, so first of all, what are we going to do? We are going to find the overhead absorption rate. Okay, for fixed production overheads. How are we going to do that? It will be 72 million. Okay, this is the overhead divided by machine hours, because they told absorption, the company absorbs overheads on a machine hour basis. So 72 divided by 96. So I'm going to open the calculator and do this. Okay, this option is, you don't have this calculator and all those things there in your first three papers. Okay, this thing was not there. It is there from F5 onwards till your advanced level. Okay, so 72 divided by 96, 0.75. Okay, what is this 0.75? That is your 0.75 per hour. Okay, rate. You need a rate. So what is the total manufacturing cost? If you see the total manufacturing cost, it is production and sales units is 300,000. Okay, and direct manufacturing cost, okay, is 20. So it will be 320,000 into 20, which will be 6 million, right? And design depreciation, the rest, the other cost, Okay, the total design, depreciation and decommissioning cost. Design, that is 800 plus 500 plus 20. So it will be 1,320,000. Okay, so total fixed production overhead will be how much? It will be 300,000 units. Okay, 300 into 3. Your previous step will be there. Okay, if you want, you can erase it. So 300,000 into how many hours? Into machine hours. Okay, so into 4 into 0.75 the rate. Okay, which will be 900,000. So it's 900,000. What is the total life cycle cost? You need to find the total life cycle cost. How are you going to get it? Okay, it is 8,220,000. How are you going to do it? 800,000 total life cycle cost. Okay, what is the total life cycle cost? It is 8,220,000. Okay, so if you want to get, because the question asks what is the life cycle cost per unit. Okay, so after you get the total life cycle cost unit, which is 8,220,000 divided by what is it, the units, which is 300,000 units. So 300, which will be 274. It is not 274, it is 27.4. Okay, somewhere 0 is less, so it is 27.4. Okay, which is the right answer. So just give me 2 minutes to see how that 8,220,000 comes. Okay, because I haven't done this question previously. I'm just doing this question with you, right? Because it has been, I even didn't do this performance management paper because it was exempted for me. Okay, so this is also a revision for me also. Okay, so this is how they have got, because the total manufacturing cost, okay, 300 into 20 with 6 million. So 6 million plus this 3, direct cost plus depreciation plus division was 1.32 million, which is 7,320,000 plus the 900,000, the production the total fixed production overheads. You add all the three, it will add up to 8,220,000. Okay, so let us go to the next one. Definitely, unlike your F1 to F3, 4, you know what whether it's right or not. Here you will not know. Here they will not show you. Only answer submit. At the end, you will know whether it was correct or not. Okay, but definitely, but you don't have to worry because the answers I'm giving you is correct. Okay, but more or less, the main thing is it's not about the answer. It's about you understanding how you got that answer in the first place. Okay. A company makes and sells products and X and Y twice as many units of product Y are made and sold as that of product X. Each unit of product X makes a contribution of 10 and each unit of product makes a contribution of 4. Fixed costs are 90,000. What is the total number of units which must be made and sold to make a profit of 45,000 to the nearest whole unit? Okay, so such type of questions will be asked. So you have to be good in maths actually. A lot of mathematical questions will come. Mathematical questions means you have to use maths, right? Without maths, you cannot do performance management. Okay, so there you need it. So how are you going to do this? 2 units of y and 1 unit of x would give a total contribution of 18. Okay, 2 units of y and 1 unit of x, because they are same. Okay, each unit of product x makes a contribution of 10. Okay, and each unit of product makes a contribution of 4. So 4. Okay, so 2 units of y, that means twice of this, 4 and 4, so 8. 8 plus the contribution of x, which is 10, so 18. Okay, and weighted average contribution per unit will be 18 divided by 3 units. How 3 units? 2 of y and 1 of x, 3. So which is 6. Okay, so sales units to achieve the target profit will be 90,000 plus 45,000. This fixed cost plus this profit divide by that 6. Okay, which is 22,500. So 22,500. Okay, let us read this again. A company makes and sells product X and product Y. Okay, twice as many units of product Y. Twice as many units of product Y are made and sold as that of product X. So most of you might take this as wrong. Okay, this is the statement why we are taking 2 of Y and 1 of X. Twice as many units of product Y are made and sold as that of product X. That means we have to take 2 times of Y. 2 times of Y will make 1x. So that's why we are taking 2y and 1x. Okay. So when we are taking 2y and 1x, the contribution of 2y will be 1y is 4. So 2y will be 8. So 8 plus 1 contribution of x is 10. So 8 plus 10 is 18. Okay. And 18 divided by 3 because 2 of y and 1x. It's like y and x. So 18 divided by 3 is 6. Okay, so you get 6. Later you add the fixed cost and the contribution, sorry, the profit, 45,000 and 90,000 divided by 6 and you get 22,500. That's how you get the number of units. It's like a formula. Fixed cost plus profit divided by contribution per price, you will get the total number of units. Okay. Next. Product GX consists of mix of 3 materials J, K and L. J, K and L, the standard material cost of unit is as follows. During mass 300 units of JKs was produced and actual usage was this, and what was the favorable material yield variance from mass to the nearest. Now you see, you studied this in even management accounting, your F2. Okay, heavily management accounting is heavily used in performance management also. Okay, so you have to be good there in F2. If you are good in F2, performance management will be easy for you. Okay, so how are you going to do that? You have to write an answer. Okay, material, you have to know the formula of material yield variance. Okay, definitely I'm not going to give you the formula, but then when I'm doing the calculation you will understand. Okay, let me take out my calculator. So 300 units should use 10 kgs each. Now you have 3000 units. Okay, and this 3000 units should use how many kgs? Okay, they should use how many? They should use 10 kgs each. So 3000 into 10 will be 30,000 kgs. Okay, so for 3000 units they used how many kgs? Okay, so if you add up this, okay, 5 plus 2 plus 3, okay, it is 10 kg. So that means they are using this mix of materials. They are using JKL, okay, for GX. So it will be 3000 into 10, which is 30,000. Okay, now they are saying for this 3000 units, okay, they have used 29,000 kgs. How 29,000 kgs? Just add up this three. Okay, add up 13,200, 6,500, 9,300. It will add up to 29,000. Okay, so they have used 29,000 kgs because these are the actual usage. Okay, this one, and this is budgeted. So actual usage is 29,000 kgs. So difference is how much? 1,000 kg. Actually, they have used 29, but they have budgeted 30,000. So it is favorable because they have used less than the budgeted. The difference is 1,000 kgs. Okay. So, so how much it will be valued at? It will be 68 divided by 10. It will be 68 divided by 10 kg. 6.8 per kg. Why 68? How did we get 68? Just add this 3. 20, 24 and 24. Okay, it is 68. So 68. Okay, this if we divide by 10 kg, you will be getting 6.8 per kg. Okay, so once you get 6.8 per kg, what do you have to do? What do you have to do? 6.8 per kg. Okay, but you cannot use the variance in kgs. You have to write it in dollar. Okay, so it will be 6.8 into 1000. Okay, 6.8 into 1000, which will be 6,800. So this is your variance. Okay, so it will be 6,800. Which is the variance. Because the difference was of 1000 kgs. Okay, so you need to multiply the 6.8 by 1000, which will be 6,800. Okay, now let us go to the next. Okay, a manufacturer and retailer of kitchens introduced an enterprise resource planning system. Which of the following is not likely to be a potential benefit of introducing the system? Okay, schedule of labor are prepared for manufacturing, inventory records are updated automatically, sales are recorded to financial ledger, critical strategic information can be summarized. Okay, it is the last one. This is not a benefit of entering the system. Okay, others are a benefit. Your inventories will be recorded automatically, sales will be recorded into financial ledger, right? Even your schedules of labors are prepared for manufacturing. All these are systems of enterprise resource planning, but not the first one. Okay, this cannot be summarized. Next, different management accounting techniques can be used to account for environmental cost. One of these techniques involve analyze costs under three distinct categories: material, system, and delivery and disposal. What is this technique known as? Activity-based costing, life cycle, input, output of flow cost accounting. It is known as flow cost accounting. It's a flow, right? From material to system, then to deliver and then disposal. There's a flow. Make sure that you know all this: activity-based costing, which data management accounting, life cycle costing, input-output analysis. You'll be studying all those things in performance management. Okay. Next, a government is trying to assess school by using a range of financial and non-financial factors. One of the chosen method is a percentage of students passing 5 exams or more. Which of the three is the value for money framework is being measured here? First of all, if you see these four options, what are the three? What does 3E stands for? Economic efficiency and effectiveness. So definitely expertise is not part of it. It's out. It's not counted as 3Es. Okay. So now the question is asking: is it economic? Is it efficiency? Or is it effectiveness? It is effectiveness, right? It is something to. It's like a result you are measuring. So it's effectiveness. Which of the following technique is not relevant to target costing? It is what? Value analysis, variance, functional, or activity. It is variance analysis. Okay. Make sure that you know what of these things are. Next, a government department generates information which should not be disclosed to anyone who works outside the department. There are many other government departments working within the same building. Which of the following should not be an effective control procedure for the generation and distribution of the information within the government department? Okay, so just to go through all this. So the answer is definitely the first one. If working from home, department and employees must use a memory stick to transfer data, as laptop companies are not allowed to leave the department. Okay, definitely you have to know how the government department operates compared to the normal private company and all. Okay, so this is something which is there in other papers also. Okay, government departments and all. But since when you are measuring the performance management, okay, it's not only for the private company, it is also for the government company also. So you'll be given for the government sector also. Next, see, okay, a jewelry company makes rings and necklaces. The resources available to the company have been analyzed and the two contracts has been identified, the labor time and the machine. Now the management accountant has used linear programming to determine this one. Linear programming is also used in financial management also. Okay, we have seen. Even in AFM. Indicate by clicking on the relevant boxes in the table whether whether each of the following is a slave resource. Okay. Labor time available and machine time. So first is the labor time available. Okay. You have to do a working here to know what is like. You just cannot say yes or no. So how are you going to do it? Now you are going to put this R and N into the equation. Okay. So if you are putting here, let us look at the labor time. R is 500. So 3 into 500 will be 1500 plus N is 400. So 2 into 400 is 800. 1500 plus 800 is how much? 2300. So 2300 is less than 2400, right? So that means what? There is a slack of 100. Okay, there is a slack. So yes, for labor time there is a slack. Okay, slack means you are having less than this, less or equal to this. The difference is known as lag. Not utilizing exactly 2400. There is a slack. Okay, 2300. Now let us go to the machine hour and see. So 0.5 into 500, which is 250. 250 plus 0.4 into 400, which is 100. So 250 plus 100 is 250 plus 100 is 350. Okay. I'm sorry. Wait. Yes, 250 250 plus 160, I'm sorry, 0.4 into 400 is 160, which is 410. So exactly it is 410. There is no slag. Okay. Next. Now you have to select out of this. Okay. At the end of 2001, an investment center has made a net assets annual operating profit. However, the bookkeeper forgot to account for the following. Machine with a net book value was sold at the start of the year and replaced with a machining costing. Both the purchase and the sales are cash transactions. No depreciation start in the year of purchase or disposal. Investment center calculates return on investment based on the closing net assets. Assuming no other changes to profit or net assets, what is the return on investment for the year? Okay. Return on investment can come financial accounting also, financial reporting also, SBR is also there, it is in financial management also. So this ratio is there through all the other papers also. You have to be good. Okay, you have to know what is the formula for this one. So first we have to find the revised annual profit. Okay, first we have to find the revised annual profit. What is the revised annual profit? The annual profit is 190,000. Okay, now you have to add your 10,000. Why 10,000? Because it has a net book value and it was sold for 50,000. So you are selling for 10,000 more. Okay, it's a profit on the sell. So you are adding 190 plus 10, which is 200,000. Okay, now the revised net assets. Even the net assets you have to find the revised. Okay, so the net asset was how much? 1 million. With this, you are deducting 40,000. Why 40,000 net book value you are deducting? Because you are selling it off. It will not be there in the assets anymore. Plus you are adding 50,000 because this cash, it's a current asset. It will be there in the net assets. Okay, then you are minusing what? You are minusing 250,000 from there, which is again cash. Why? Because when you are replacing machine costing, it's a cost. To buy this machine you need to pay 250,000 and add 250,000 asset. Okay, so 250,000 cash will go, you're deducting, but also an asset will come. So it does not make an impact because minus 250 plus 250 is 0, but these are just accounting entries you need to make. Okay, so you are getting 1,010,000. Okay, so 200,000 divided by 1,010,000, which will be 19.8%. Okay, this will be the return on investment. Make sure that you get 19.8%. Next, a manufacturing company uses three processes to make its two products X and Y. I think examiner likes X and Y too much, everywhere X and Y, X and Y. Okay, the time available on the three processes is reduced because of the need for the preventive maintenance and rest breaks. The table below details the process time per product and daily time available. So you have been given the three process. You have been given the hours also for each process. Hours required for the product test and for Y. Okay. So daily demand for X and Y, 10 units and 16 units. Which of the following will improve throughput? What is throughput? Okay. If you don't know, Google and check. So which of the following will improve the throughput? Increasing the efficiency of the maintenance routine for process 2. This will increase. Why? Throughput is determined by the bottleneck resource. Throughput means what thing in your process is stopping you. Okay. Slowing your process down, overall process down. There must be some bottleneck or some what do I say? Something which is stopping you on an obstacle. It's like an obstacle in the process. Okay. So process 2 is the bottleneck as it has insufficient time to meet the demand. Okay, process 2. If you see, okay, all the other three options either increase the time available or the non-bottleneck resource increase demand for an increase in supply which cannot be achieved. So it is this one. Next. Bus company uses recycled plastic to manufacture shopping baskets for local retailers. The standard price of the recycled plastic is this 0.5 per kg and standard usage of recycled plastic is 0.2 kg for each basket. The budgeted production was 80,000 basket. Due to the recent government incentives to encourage recycling, The standard price of recycled plastic was now expected to reduce to 0.4. You see, before it was 0.5, now it is 0.4 per kg, and the actual price paid by the company was 0.42 per kg, and 100,000 baskets were manufactured using 20,000 kgs of recycled plastic. What is the material operational price variance? Okay, so definitely out of this you have to get one. Okay, let us do a working for this. So 20,000 kg should cost how much? 0.4. Okay, the 20,000 kgs. So when you're multiplying 0.4 by 20,000, you will get 8,000. Okay, but actually the 20,000 kgs cost how much? 0.42. So multiply 0.42 by 20,000 is 8,400. Okay, so actually it's costing more. So definitely it means it's an averse. Okay, either this or either this. So it's 8,400 minus 8,000, so 400. Okay, next. A profit center manager claims that the poor performance of her division is entirely due to factors outside her control. She has submitted the following table along with notes from a market expert, which she believes explains the cause of the poor performance. Okay, so they have given the market expert notes. After adjusting for the external factors outside the manager's control, in which category is there evidence of poor performance? Okay, is there evidence of poor performance? In which category? Is it in sales price? Is it in sales price and material cost? Is it in sales volume and sales price or material cost only? Okay, so just look and see. Here, let us go by the sales volume. So, unit was budget 500, actual is less. Okay, so actual last year was 400. Now, market expert knows the entire market has decreased by 25% compared to last year. This product will be obsolete in 4 years. Okay, let us read the sales revenue. Budget is this, actual is less, but rival in the market saw selling prices fall by 10%. Total material cost. Okay, as demand for raw materials decreases, supplies lower their price by 5%. So now, after adjusting the external factor, after adjusting, okay, which of this will be poor performance? It will be material cost only. Okay, why? Because when you are flexing the material budget, okay, it is higher than the budget. Okay, it will be higher than the budget, even, okay, while the external environment shows that the prices are reducing, because they told raw material prices is decreasing, the suppliers lower the prices, but this indicates that although the suppliers, okay, even though they lower their prices, what happens? Manager is still overspending. So if manager is overspending, means it's a poor performance. But when you are flexing the sales volume and the prices, the manager are performing better. Okay, just flex it and see. Make sure that you know how to flex, which I'm not showing right now. Yes. Indicate by clicking on the relevant boxes why each of the following statements regarding market penetration as a pricing strategy are correct or not. What is market penetration, by the way? Market penetration is when initially you are coming in the market with a lower price. You are setting a lower price to penetrate the market. Okay, that is known as market penetration. So which of this is correct? First one, it is useful if significant economies of scale can be achieved. Yes, correct, definitely. It is useful if the demand is highly elastic. Yes. Highly elastic means what? If you increase your prices, even by a smaller amount, demand will fall by a huge amount. Very elastic, very sensitive. So for those type of product, you can penetrate the market by setting a lower price because very highly elastic, right? Next, last question for section A. Okay, so a company makes two products using the same type of material and skilled workers. Okay, product A and product B. Fixed cost relating to material handling amount to 100,000. The cost driver for this cost is the volume of material purchase, and general fixed costs are observed on the basis of labor hours is 180,000 using activity based costing. What is the total fixed overhead amount to be observed into each unit of product B to the nearest dollar? Okay, product B. They didn't ask for product A. So make sure you know activity based costing. Okay. So how are you going to start this? How are you going to do this? You definitely, what else you need? What do you need? First, you have to decide what you need. What all things you need and how are you going to start with this? Since this is the last question, I can take my own time and explain this. Because a lot of workings are required for this. So first we are going to do, there are two things. One is material, one is labor. So first we have to make a total material budget and a total labor budget. Okay. So definitely I'm not going to write, but let us do. You can write it down while I'm saying. First we are going to deal with the material part. So total material budget will be how much? If you can see, the volume is 1,000 units. Okay. We need product A because we are finding the total material budget. Okay. For that we need 1,000. So 1,000 into 10. And here plus 2,000 into 20 for B. So when you put it will be 50,000. And what is the fixed cost relating to the material handling? It is 100,000. So it will be 100,000 divided by 50, which is 2. So overhead absorption rate is 2. $2 for the material. So for product B it will be 2 into how much? $2 into 20. 20 for B. Okay, 2 into 20, which is 40. $40. So let us keep that aside. $40. Next, let us go to the total labor budget. Labor budget also same we are going to do. 1,000 into 5 plus 2,000 into 20. When you add, you will be getting 45,000. General fixed cost will be 180,000 for the labor. So 180,000 divided by 45,000 will be 4. Okay, so that 4 you again multiply by 20 because labor hour is also 20, which is 80. So 40 and 80 you add and you will be getting 120. Okay, so with this I stop. The next one will be on section B. Okay, you can just see section B will look like. So the next question I'm going to start is section B. For section B questions, you will be given a case study or a background, some information like this. Based on this, you'll be given 4-5 questions. Okay, you'll be given a case study like this for section B. Okay, so that's it for section A. This is how your performance management exam looks like. Okay, even the real exam, even though this is a practice test one, the reason I didn't choose a past paper is in the past paper only section C questions are there. Section A and B I would not be able to show you how it looks like. So that's why I'm doing a practice test. But this is how a real exam looks like. Okay. So with that, I end this video here and see you in part 2 where I'll be going through section B of performance management.